Assalamu alaikum. Dear student, let's start the second and I would say last lecture on property income. As I did mention in the previous lecture that property income is not a really big topic, but in this lecture, let me again explain just you can say a little bit revision of the premium, and then we'll go to the remaining topics of property income. Oh no, something went wrong. Safe, Alhamdulillah. We are safe. Premium. I think I did mention in the previous lecture that uh, getting premium for the landlord is only possible when your property is on a very good location. Then there's a possibility that you will be getting a premium as well. But nobody will be asking either it is TX or ATX. Nobody will be asking the question when landlord gets the premium. The main thing is you should know the tax treatment of the premium. So, for example, Mr. A has received lease premium of, let's say, £60,000. Lease term is 20 years. You are just supposed to calculate assessable premium, taxable premium. The entire premium, which is 60,000, the entire 60,000 premium is not taxable. You will get relief on that. So first simply write the amount of the premium, which is 60,000, less the relief. How do we calculate relief? It is very simple. 2% n minus 1, n is the lease term, into the amount of premium. After deducting the relief, whatever comes, that is your taxable premium, and this taxable premium will increase your property income. So a really simple treatment of premium. So just a minute, 60,000. So taxable premium is 37,200. The taxable premium is 37,200. Now, what are the remaining topics in property income? Let me tell you. Actually, now in property income, basically, we have one concept of furnished holiday letting, which we need to discuss. And second, and the last concept, second last concept will be renter room relief, and the finally, property losses. So, furnished holiday letting, renter room relief, and property losses. Let us first discuss furnished holiday letting. Furnished holiday accommodation. Actually, you just need to know one thing. When XYZ property will be treated as a furnished holiday letting, what are the conditions of furnished holiday letting? The second, if a property is a furnished holiday letting, then what are the advantages of a property being declared as a furnished holiday letting? That is what you need to learn. Profit arising from commercial letting of furnished holiday accommodation are assessable as property income, but treated as though profits arose from a separate trade and treated as earned income, not investment income. Again, on furnished holiday accommodation, you will be normally going for the cash basis until unless if rental income exceeds 1,50,000, then obviously accrual basis. In the same way as the normal property, the cash basis should be used to calculate furnished holiday income unless gross rental exceed 150. In the examination, it should be assumed that cash basis applies unless the question states otherwise. The accommodation rules of furnished holiday letting are given below. Summarize these. Leave this. Furnished holiday accommodation qualifying conditions. Dear students, L plus R. The qualifying conditions of furnished holiday letting. The qualifying conditions of furnished holiday letting, dear students, you must be able to, number one, understand, and second, you have to memorize them. Either it is TX or ATX. Normally, the very straightforward question comes on this area, and simply examiner asks one thing, that what are the conditions of furnished holiday letting. So number one, we are talking about furnished holiday letting. Basically, we are talking about holiday accommodation. Let me explain. Uh, Actually, when we say furnished holiday accommodation, normally this property will be on a tourist spot. You might have seen, in addition to hotels, there will be number of properties which individuals they own, and they give those properties to the tourist. So this furnished holiday accommodation will be on a tourist spot. Obviously, on a tourist spot, normally when we give property to the tourist, it is furnished. It will have each and everything. So we are talking about that kind of property. Look at the name. It says furnished holiday accommodation. In order to qualify as furnished holiday accommodation, the accommodation must satisfy all of the following conditions. Number one, the property is situated in the UK or European Economic Area, furnished and let on a commercial basis. It must be furnished. Second, you have given this on a commercial basis. You have not given this property someone without rent. So actually you have given this property on commercial basis. You are simply charging a rent. Okay. It is available for commercial letting to the public generally as holiday accommodation for not less than 210 days a year. In the entire year, that property must be available to the, let's say, tourist for 210 days. So it should be available, it must be available for letting at least for 210 days in a year. The accommodation is actually let for at least 105 days a year, excluding the periods of long term occupation. A very important point, the accommodation must be available for letting in the entire year for at least 210 days. It is available for letting. Available for letting does not mean actually it is on letting, but the second condition says actually the property is given on letting at least 105 days, and those 105 days will not include long term occupations. Now, what do you mean by long term occupation? I'm coming to that, but let me explain. At least this accommodation must be available for letting at least for 210 days, and 50% of 210 days is 105, and actual letting should be letting must be at least 105 days, excluding the long term occupation. Now, what do you mean by long term occupation? We're coming to that. Just wait. Where a taxpayer owns more than one property, the 105 days test is satisfied if the average number of days for which the properties are let in the year is at least 105. For example, assuming Mr. A is having property 1, he's also having assuming property 2. He has given property 1 for 150 days, 150 days. Actually, property 1 was on letting, and property 2 was on letting only for 100 days. Assuming in the tax year 22-23, property 1, the owner is, let's say, Mr. A, and he's also the owner of property 2. Assuming property A was actually on letting for 150 days, but the property 2 was actually on letting for 100 days. Since the owner is same for both the properties, so 105 test will be checked on average basis. If I add both of these, I'll get 250 divided by 2. It becomes 125, and obviously this 125 is far more greater than 105. So this 105 test is met for property 1 as well as for 2. For 1 it is already met, but now it is met for property 2 as well. It says where a taxpayer owns more than one property, the 105 days test is satisfied if the average number of days for which the properties are let in the year is at least 105. So when someone is having more than one properties, then we'll check 105 test on average basis. Now let's discuss what do you mean by long-term occupations. The accommodation is normally not let for more than 31 consecutive days. Giving property for 31 or more than 31 days means that is long-term occupations. The accommodation is normally not let for more than 31 consecutive days because that's normally happens. Normally, I don't believe that tourists are going to come and live in your property for more than 31 days. They will be living, the same tourists might be living for maximum, I would say, 10 days, 7 days, or maybe 2 weeks. but more than 31 days, rarely it happens. The accommodation is normally not let for more than 31 consecutive days to the same person. However, if during 12 months period, there are periods of letting to the same person in excess of 31 consecutive days, the aggregate of these long-term periods must not exceed 155 days in total. Now, what do you mean by this? Let me explain. For example, let's say we have given this property to Mr. C for 32 days. That's a long-term occupants. I've given the same property to Mr. D for 35 days. I've given the same property to Mr. E for 33 days. So obviously Mr. C, D, E, all of them I have given a property for long-term occupants. Then the total must not exceed 155 days. So simply 32 plus 35, 33, it is not, it is just 100 days. So again, read it what it says. The accommodation is normally not let for more than 31 consecutive days to the same person. However, if during 12 months period, there are periods of letting to the same person in excess of 31 consecutive days, the aggregate of these long-term periods must not exceed 155 days in total. So obviously you might be thinking that what if it exceeds? Obviously, if any one of the condition is not met, if any one of the conditions is not met, then that property is not treated as a furnished holiday accommodation. The benefits of furnished holiday accommodation can only be enjoyed if all the furnished holiday letting conditions are met. Even a single condition is not met, then that property will not be treated as a furnished holiday accommodation, then it will be treated as a normal property. So that is why meeting all the conditions are necessary in order to get the benefits associated with furnished holiday accommodation. What are those benefits? I'm coming to that. Wait. Losses. It is also possible that instead of having income in the furnished holiday accommodation, you might be having losses. So how to deal with that? Losses from furnished holiday accommodation cannot be set against any other income. If there are losses in the furnished holiday accommodation, you cannot set off that loss against any other income. They can only be carried forward and offset against profit from the same furnished holiday business. Very important one. If you are having losses in furnished holiday accommodation, those losses cannot be offset against any other income. All you need is simply carry forward the furnished holiday accommodation, and from the same furnished holiday accommodation, when you will be having a profit, from that profit you will set off the losses. UK losses can only be set against future future UK furnished holiday income, and economic European economic area losses can only be set against future European economic area furnished holiday accommodation. Simply, if your furnished holiday accommodation is in UK and you are having losses in that accommodation, then you have to wait for UK furnished holiday accommodation to become profitable, and then in the future you can deduct UK furnished holiday letting losses from the UK furnished holiday accommodation profits. Now, what are the benefits if a accommodation is a furnished holiday accommodation? Advantages of furnished holiday accommodation. Leave this. The profit will be treated as an earned income arising from a single trade carried by the landlord. Advantages of being treated as earned income include. So these advantages, dear student, these are L plus R, learn plus repeat. Try to number one understand and then you need to memorize them. Profits treated as a relevant earning for pension relief. The way back when we did discuss pension income topic. So in that there was a point where we did discuss there are three relevant earnings. One is employment income, another is trading income, and the third one is the income from the furnished holiday accommodation. This point only those students can understand they are revising. If you're not revising, so what I just tried to explain that this furnished holiday accommodation earning is a relevant earning. This will be Greek to you. You won't be able to understand until unless you are revising it. So profits treated as a relevant earnings for pension relief. Finance costs are usually deductible from income. There is no restriction on the basic rate relief. If you just recall the previous lecture, what we did in the previous lecture, if you have taken the loan to acquire a property and then you have given that property on rent, another possibility you took the loan and to incurred capital expenditure on that property. So what we did in the previous lecture, the normal residential property which you give on rent, if you have taken loan either to buy that property, if you have taken the loan for to incur capital expenditure on that property, or even you got the loan to for even repairs, finance cost is not deductible from the property income. What do we do for calculating income? While calculating income tax liability, we just deduct finance cost relief. But when it comes to furnished holiday accommodation, if you have taken the loan either to buy furnished holiday accommodation, or you have taken the loan to for capital expenditure on furnished holiday accommodation, or you have taken the loan for repairs on furnished holiday accommodation, the entire finance cost will be deducted while calculating furnished holiday accommodation. Plant and machinery, deduction is available for all plant and machinery, including furniture and furnishing, if the cash basis are used. If you're using cash basis, which is the normally case, then plant and machinery, furniture and furnishing, whatever the cost is, you will deduct all plant and machinery and furniture and furnishing cost if you're using cash basis. So plant and machinery, a deduction is available for all plant and machinery, including furniture and furnishing. If their accrual basis is used, then normal capital allowances, annual investment are available. We have not studied capital allowances. We will study. You just need to remember right now one thing. If accrual basis of accounting are used, then normal capital allowances are available. And how do we calculate normal capital allowances? Inshallah, we will study. Right now, just remember and then try to understand one thing. In case of plant and machinery, the entire amount will be deducted while calculating furnished holiday accommodation. Even furniture and furnishing will be deducted. But if you're using cash basis, in case of accrual basis, you will be getting capital allowances. This is instead of replacement furniture relief. So that is something else. So instead of replacement furniture relief, you'll be getting capital allowances. Instead of replacement furniture relief, if you're buying a plant and machinery, whatever cost you have incurred on that plant and machinery, it will be deducted while calculating furnished holiday accommodation. Property is treated as a business asset for capital gain tax purposes, and consequently, the disposal of furnished holiday accommodation are the following reliefs available. These are the reliefs which are available: business asset disposal relief, rollover relief, gift relief. We have not studied this, but don't worry at all. Inshallah, dear student, we will study. Business property relief IST may be available, but only if. So let me explain this. Only this area. Just this. I'm trying to make the rectangle. I don't know it is what. Only this area is only belongs to ATX. Only this. It does not belong to TX. It only belongs to ATX. Business property relief for IHT may be available, but only if it is run as a business. For example, Carwan Park or estate. There is a substantial involvement by the owner, and additional services are provided. For example, cleaning, laundry, TV. So simply BPR is available if it is running. If it is run, this accommodation is run as a business. An owner is heavily involved, and additional services like hotel services, you can say cleaning, laundry, these services are available. So only this last point falls in ATX. Otherwise, everything is same in ATX and TX. A very important point now. Dear student, try to memorize these advantages. But obviously, you have not studied capital gain, CGT, IST. You will study automatically. Will become in a better position to understand these rules. Now let's talk about rent a room relief. It is possible in UK. Let me explain that. What is this? Rent a room relief. It is possible in the UK that owner is living the accommodation and owner has given, let's say, one room on rent. Owner gives if owner gives a room on rent, that on then owner gets a rent a room relief. And the rent a room relief in Finance Act 2022, even in 2021, is same 7,500. How it works? For example, a rent from room. Okay, say assuming rent from room is 10,000. Expenses relating to this room. Expenses relating to this room are 6,000. And we know that rent room relief is, okay, let me tell you one thing. Rent a room relief 7,500 is available per tax year. It is not available per room. It is actually available per tax year. So 7,500 is available per tax year. Okay. How do we deal that? There's a rent from room which is 10,000 pound, and on this room, relating to this room, expenses incurred, the amount is 6,000, and rent a room relief is 7,500. Now listen carefully. If an individual claims rent a room relief, then you cannot deduct expenses. So you have to choose either to deduct expenses or rent a room relief. So very simple. Let's take the rent, which is 10,000. Expenses and rent a room relief, whichever is higher. Obviously, rent a room relief is higher. I'll go for that. Rent a room relief. So the taxable amount comes only 2,500. So rent from room is 10,000, expenses are 6,000, but rent a room relief is 7,500. So you have to decide either go for expenses or rent a room relief. Simply whichever is higher, go for that. But there's another case also. Let's go for case B. Assuming rent from room is 6,500. Expenses relating to room are 7,000. And we know that a rent a room relief is 7,500. Okay. Now listen and listen carefully. The rent from the room is 6,500. Let me explain. The rent is 6,500. If you go for rent a room relief, which is 7,500, mathematically negative is coming, but you have to write 0. Why? Because rent a room relief cannot result in losses. Rent a room relief cannot result in losses. On the other hand, the rent amount is 6,500, but expenses are 7,000. If I deduct expenses, so there's a loss of 500. Now listen and listen carefully. If you come across a situation where after deducting the expenses, the result is a loss. Repeat, if you come across a situation relating to a room, then where after deducting expenses from the rent from room, you are having a loss, then you will not be claiming rent a room relief because rent a room relief cannot result in loss. In that case, we will be deducting expenses. Because if we are having a loss, the benefit is by using this loss, we can save the tax. So simply you need to remember, if you come across a situation where after deducting the expenses from the rent which you have taken from the room, if you're having a loss, then go for that. Because rent a room relief cannot result in loss. Even the mathematically negative comes, we have to write 0, which we did. So simply in a question where after deducting the expenses, the final answer is loss, then we will opt that. So over here, so let me explain simply how do you remember? If expenses are more than rent, in that case, obviously the result will be loss. So in that case, we will not claim rent a room relief. So if you come across a scenario where expenses are more than the rent from room, then that will result in loss. We'll go for that. We will not claim rent a room relief. Another possibility, there's a possibility that the rent which is coming from the room is shared between husband and wife. Repeat, there's a possibility the rent which is coming from the room is shared between husband and wife. If the rent which is coming from the room is shared between husband and wife, in that case, rent a room relief 7,500. In total, it will be available, but it will not be available to each person separately. So how it will work then? We'll take 7,500 and 50% of this is 3,750. If husband and wife both are let's say sharing the property income, the rental income from the room, in that case the rent or room relief will be available to both of them according to half. So what you have to take 50% of 7,500. Rent a room relief. I try to explain all this. Just take this. A married couple and civil partner. A married couple or civil partner who take in lodgers can either all the rent paid to one partner. If all the rent is paid to the one partner, then 7,500 will be available to that partner. Or have the rent divided between them, and each partner will have a limit of 3,750. In case if husband and wife, out of husband and wife, only one person gets the entire rent. If entire one person gets the entire rent, then only that individual will get the rent a room relief of 7,500, and this 7,500 is available per tax year. But if the rental income is divided between the husband and wife, then rent a room relief will be available 3,750 to each. Okay. The rent a room limit is included in the tax rates and allowances provided in it. So this 7,500 will be available in tax rates. So I don't think so that memorizing or remembering 7,500 rent a room relief is difficult. It's very easy. Now let the final concept of the property business laws. The final concept is property business laws. In fact, it is property business losses. Okay. Profits and losses can all the properties are aggregated. It is possible one individual might be having more than one property. So what we do, we will add the profits and losses of all the properties. If the final answer is loss, let's say, if there is an overall loss, the property income assessment for the year will be nil. Obviously, if overall there is a loss, you will not be having any taxable income. The loss is automatically carried forward and set against the first available future property income. What do you mean by this? Assuming in the tax year 22-23, we are having property losses. Instead of income, we are having losses. Assuming there's a loss of 10,000. So while solving the question, instead of writing the loss of 10,000 in tax year 22-23, for property loss, you will be writing 0, nil. Then this loss will be carried forward. Assuming property losses slash property income. Assuming in the tax year 23-24, there's a property income of 20,000. From this 20,000, we will deduct the property loss of 10,000. So brought forward property loss 10,000 will be deducted. So simply, if assuming the current tax year is 22-23 and we are having property losses, so while solving the question, we will be writing 0, and this property loss will be carried forward. So obviously the carry forward of 22-23 will be brought forward for 23-24. And this carried forward loss of 22-23 will be deducted from the first available property income. And in my example, the first available property income is in the tax year 23-24. So simply from that property income of 20,000, we will deduct 10,000 loss. This is how we deal with property losses. So simply property losses can only be carried forward and set off against the property income. You cannot set off the property loss against any other income. So dear student, that was all about your property income. Now let me just give you a little bit idea about the employment income, which is a very, very important topic for us. Employment income. There are three topics in employment income. Only one topic is common in ATX and tax. Number one is basic employment income. Basic employment income. Basically, this basic employment income is common in tax and ATX. The second you can say is termination payments. Termination payments, this topic only falls in ATX. And the last is share-based payments. Share-based remuneration. The share-based remuneration only falls in ATX. So you can see the difference between little bit difference between tax and ATX. The basic employment income is common in tax and ATX, but termination payment and share-based payment, uh, they are only in ATX. We don't have termination payment and share-based payment in tax. Okay. Now let us simply discuss few points. So that what are the differences you can say between self-employed and employed. I'm just giving you the idea. Employment versus self-employed, because you never know. You may face a 2 marks question relating to the differences between employment and self-employment. Just because of that, let me give you the idea. Employment, first point. In employment, uh, employee is answerable to the senior. You have to write in your own wordings. Employment, employees answerable to the senior. Obviously, in self-employment, you are only answerable to yourself. Second, in case of employment, there are specific hours of the work. There are specific timings. Obviously, in employment, you cannot do that. I'll be working at that time. I will not be working on this time. So, in case of employment, you will be given a specific time, and you will be working only on that time. Third, in case of employment, your employer gives you the tools. Simply, your employer gives you the asset to so that you can do the uh, uh, you can give the services. So simply you can write all the tools will be available, will be given to the employee by the employer. In case of self-employed, obviously you will have to arrange for all the tools. So simply for in case of employment, so the first one was you will be having you are answerable to your seniors. Second, you will have to follow the timings given by the employer to you. Another point, your employer gives you the tool so that you can work over there. And another point, your employer will have to tell you. Uh, your employer will also, you can say, your employer will decide the what bonus will you be getting, or either you will be getting the bonus or not. Who will decide? Obviously, the employer. So these are the just basic differences. Just I wanted to give you a little bit idea about employment and self-employment. Self-employment means you are only answerable to yourself. You have your you will be working according to your will. No matter you are working less or more, you have to decide. Nobody else is going to decide for you. So dear students, simply thank you very much for watching this lecture. Have a nice life. Inshallah, in the next class we'll be starting our lecture from the basic employment.